A motor vehicle tax is charged on every retail sale of a motor vehicle. A tax is imposed on every retail sale of a motor vehicle sold in the state, and the tax is an obligation of and shall be paid by the purchaser of the motor vehicle. Since January 1st of 1996, unless an exclusion applies, every licensed motor vehicle dealer must collect the tax from the purchaser, and the sales tax is remitted to the county that is specified by the purchaser, which may not be the county where your dealership is located. Dealers will be held liable for tax, penalty, and interest due to any discrepancy in your records. So the Texas sales tax rate is 6.25% of the sales price minus any trade. A licensed motor vehicle dealer will collect sales tax at the time of the sale on most transactions with the title application. Then the purchaser, that's your customer, is going to specify the county where the sales tax will be remitted with the title application. And we're going to cover this process extensively later on in your dealer course. A licensed motor vehicle dealer will normally be charging the sales tax rate of 6.25%. A dealer is not required to collect tax on the sale of a motor vehicle when the gross weight of that vehicle is in excess of 11,000 pounds. If the dealer does not collect the motor vehicle sales tax, you must still provide the purchaser with Form 130-U, which is signed by both the dealer and the purchaser. And I'm going to show you that form here in just a couple of moments. A Texas licensed motor vehicle dealer may purchase vehicles for resale without an application for the Texas title, but you would need to issue Form 14-313, that's called the Texas Motor Vehicle Sales Tax Resale Certificate, to the selling dealer. A one-time blanket certificate may be issued as well. And here you see Form 14-313. Be sure to enter the contact information for the purchaser and your dealer number, and enter the rest of the information, and always be sure the dealer purchasing the vehicle signs and dates Form 14-313. And remember that all these forms can be downloaded at the TexasDealers.com website, and you can watch these training videos at any time at TexasDealers.com just by scrolling down to the Texas Dealer Videos link. The Texas Department of Motor Vehicles requires Form 130-U to apply for title and or registration. The Comptroller's Office requires Form 130-U to pay motor vehicle tax or claim exemptions. The form must be signed by both the dealer and the purchaser. Form 130-U must be completed for all retail sales by the dealer and exempt sales, such as the sale to a nonprofit. And here you can see that Form 130-U. It's going to contain the Assessor Collector Transaction ID number, your Texas dealer number. It'll have a vehicle description, the license plate number, lien holder information if applicable. It'll have the sales price, trade-in value and description if applicable. It's going to have the amount of sales tax that is due, a reason for exemption of sales tax if applicable. It's going to have the seller's address and signature. In this case, if you're selling a vehicle on your lot, remember, you'll be the seller. And it's going to have the purchaser's name and address, which is obviously going to be the person that is buying the vehicle from you. County tax assessor collectors use Form 130-U to determine the tax due and complete the tax receipt that's going to be issued to the new owner. So let's go ahead and magnify this, because you're going to be filling this out a lot. You'll be filling out Form 130-U a lot. So you definitely need to know how to complete it correctly. So for this example, let's say you're applying for a title and registration for a customer that just purchased a vehicle from you, and the customer paid with cash, so there will be no loan or any liens filed. At the top left of Form 130-U, you would check the title and registration box. If you're correcting a title or registration, be sure to enter that information as well. Be sure to leave the top right grayed out section blank, as it says, because this is for tax office use only. You're going to enter the vehicle identification of the vehicle, along with the year, make, model, the major color, and the minor color, and those can never be the same. Then enter the license plate number and the current odometer reading. I want to bring your attention to box 10. If you are aware the mileage is incorrect, you will check the not actual box, or maybe the vehicle only has 5 digits on the odometer and it reads 23,000 miles, but you're fairly certain the vehicle has 123,000 miles or 223,000 miles, and you suspect the odometer has rolled over, you would check the mileage exceeds mechanical limits box. or maybe you have an older vehicle or you're selling a trailer. Obviously, a trailer has no odometer. You would check the exempt box. Enter the weight and the carrying capacity. In box 13, be sure to select the person that is applying for the title. Normally, if you sell a vehicle to an individual, you will select individual, unless you sold the vehicle to maybe to a business or a government entity or a trust or a nonprofit, then you would obviously select the corresponding box. Enter the photograph ID number and then what type of ID that purchaser is providing, such as maybe a driver's license or a passport, a military ID, or other type of identification. Be sure to enter the name exactly as it appears on their government-issued photograph ID. Spell their name exactly like it appears on the ID so it is not spelled incorrectly. Also be sure to enter the county of their residence. Then enter your information as the previous owner, so you're going to put your name and your dealership name there, and then be sure to enter your dealer number in box 21. Enter the renewal recipient if it's different than the person that's entered above. Enter the customer phone and email, and I would certainly suggest recommending to the customer to check the registration renewal e-reminder so they can receive email notifications when registrations for that vehicle are due. If the customer has a communication impediment, they can check the box and also submit a form VTR 216 if they do have a communication impediment that you see right there in box 28. Enter a vehicle location if it is different from the customer's home address. Select if there are multiple liens on the vehicle or if they want an electronic title request. As you can see on the form, you may not order an electronic title request when there are multiple liens on the vehicle. Enter lien holder ID and the date, and then the lien holder address, if applicable, if there's a loan on the vehicle. For this training scenario, as stated earlier, let's say we sold this vehicle for cash and there's no lien being filed. Then check if you're taking that fair market value deduction, which we'll discuss here later on in the course. Now you're going to enter any trade-in information, including the year, the vehicle make, and the VIN. In box 38, you are going to do the sales and use tax computation. For this example, let's say we sold the vehicle for $25,000 and took a trade-in that was worth $10,000. So you will take $25,000, then subtract the $10,000 trade-in, which would equal $15,000. So you'll easily take that $25,000 minus $10,000 would equal $15,000, which you will multiply by the state's sales tax rate of 6.25%, which will equal the amount of tax due for this example would be $937.50. Pretty easy, huh? Now, if you did not take a trade-in, then you would be charging the sales tax on the entire sales price. But always remember, if you took a trade-in, you'll take the selling price, you'll subtract the trade-in, and that will equal the amount that you multiply by 6.25%. Be sure to compute any penalties into this equation as well. And we will cover sales tax extensively in just a few moments later on in this section. You're going to sign it and then handprint your name and the dealer name and the date, and then you're going to have your customer sign it, handprint their name, and then date that as well. Be sure you study the Form 130-U in the manual you downloaded, and always be sure you complete it in its entirety. Otherwise, it could be rejected by the county tax assessor collector, and then you would have to resubmit it. Later on in the course, we're going to cover the Texas Department of Motor Vehicles web dealer system, which will allow you to submit your title paperwork electronically to the county offices to process the title application. You will need to scan the required documents to your computer, then upload the documents through the web dealer system. And after the title application is approved by the county, a copy of the county approved final receipt can be printed by the dealer and will contain a barcode at the top along with the web dealer title ID number and document number. And we are going to cover web dealer extensively later on in your dealer course. By the way, you may have heard of standard presumptive value, and standard presumptive value only applies to sales between individuals that are not licensed dealers. So always keep that in mind. We never apply standard presumptive value. That is for individual to individual sales. Next, though, we are going to cover motor vehicle inventory declaration, which you will be filing annually, and the motor vehicle inventory statement, which is quite different and will be filed every month. And I want to make sure that you're aware there is a significant difference between these two important and mandatory notifications. Let's go ahead and start with the dealer's motor vehicle inventory declaration. For property tax purposes, state law requires a motor vehicle dealer's inventory is appraised based on the total sales of the vehicles in the prior year. I want to repeat that. For property tax purposes, state law requires that a motor vehicle dealer's inventory is appraised based on the total sales of vehicles in the previous year. Dealers are required to file a dealer's motor vehicle inventory declaration. This is Form 50-244 with the county they are located in every single year. The total number of sales from the previous year must be included on this form. The VIT declaration, Form 50244, is filed with your county chief appraiser, and you must also send a copy to the tax assessor within 30 days of being licensed. Now, I want to repeat that very important statement. The VIT declaration, this is Form 50-244, is filed with your county's chief appraiser, and you must also send a copy to the tax assessor collector. Remember, you're going to do this within 30 days after you get your dealer's license. This is mandatory. The VIT declaration informs these offices that a new dealership has been started in the state of Texas, and a file must be started on this new dealership that you're getting ready to open. After you open your dealership, you must complete and file VIT statements. This is Form 50-246, which is a different form, which I'm going to show you in just a few moments, and you'll file that with your county tax assessor collector and send a copy to the county appraiser's chief appraiser, your county appraisal district's chief appraisal. And I'll go over this with you again in just a moment. I want you to be aware, though, no VIT payments are due on these reports during your first calendar year in business. I want to repeat that important statement as well. No VIT payments are due on these reports during your first calendar year in operation. The monthly VIT statements will be used to establish the tax rate for the following year. So you'll start these the second calendar. So remember, the dealer's obligation to pay your VIT payments begins on January 1st of the calendar year after the dealership has been established. In January of each year between January 1st and January 31st, a dealer must file an annual VIT declaration, Form 50-244, summarizing sales for the previous calendar year. And this report is required by law to be submitted by February 1st every single year. And you know, as we're filing these, a dealer is presumed to be the owner of every motor vehicle in your inventory on January 1st of every single year. This law excludes, manufacturers, wholesale dealers who do not sell self-propelled vehicles, such as equipment or machine designed or intended for specific work-related purposes other than transporting people or property. Now, the following Form 50-244 example is completed with the assumption that the dealer sold 50 vehicles to retail customers that sold for $5,000 apiece. And it also assumes that the dealer sells 10 vehicles to other dealers, and each of those vehicles sold for $2,500 apiece. So we'll try to make this scenario pretty simple, so hopefully it'll make it a little bit easier to understand. Let's say for this sample as well that the dealer had no fleet transactions or no subsequent sales. The dealer in the example that we're getting ready to use is located in Austin and has been in business for the entire year. If you're just starting your dealership, you will need to file this form within 30 days of being licensed. The information in this form is only to be used as an example, so be sure to correct your dealership sales information. And if you ever have specific questions, your county tax assessor collector will have great answers for you. So your assessor collector office is going to be a great resource for you once you become a dealer. Let's go ahead and magnify Form 50-244 to ensure we are completing it correctly. Be sure to enter the year you are declaring at the top right, and then enter your county appraisal district address. This is the address you will be sending your original to, and then enter your county tax office contact address, and this is the address you will send a copy of Form 50-244 to as well. Next, enter your dealership contact information, including the name of the person completing the form, along with the person's title, such as maybe it's you, the owner, or maybe it's a general manager or a partner. Then you'll enter the business location address, and be sure to include your new general distinguishing number. That's your sometimes we call it your P number. That's your dealer license number. and your start date if you were not in business on January 1st. Before we move on, I want to explain this section of Form 50-244. The market value of the dealer's motor vehicle inventory on January 1st is the total prior year's annual sales from the dealer inventory minus any sales to other dealers divided by 12. Now, did you get that? Let me repeat that again for you, okay? The market value of the dealer's motor vehicle inventory on January 1st is the total prior year's annual sales from the dealer inventory minus any sales to other dealers, and then we'll divide that by 12 for every month in a year. So for this example, let's say we sold a total of 50 vehicles, with 10 of those vehicles being sold to other dealers. And let's say for this example, we had no fleet transactions or subsequent sales. Let's also say the total selling price of the vehicles that we sold was $250,000, and the total prices for the 10 vehicles we sold to other dealers was $25,000. So you're going to subtract the $25,000 in sales from the total of all sales for a total of $225,000. Now, simply enter the total of vehicles we just sold. Remember, that's $225,000. So just divide $225,000 by 12 to equal, for this example, $18,750.00. I want to remind you, you can always watch these training videos again by visiting the TexasDealers.com website. And on any page, just click on the dealer videos link to review this content again after you've taken the course, and you can certainly fast forward to the content that you want to review at that time. So finally, you'll enter your dealership name. You're going to print your name, the titles, and sign and date. And remember, for any person that's obtaining a dealer's license for the first time and was not licensed on January 1st, the chief appraiser will estimate the value of the inventory the following year using sales data from the previous year. If the vehicle inventory declaration is not filed by February 1st of each year, the Texas Department of Motor Vehicles generally seeks penalties and or sanctions, which could be the revocation of a regular active dealer, depending on violations and depending on the dealer's history, including any corrections that the dealer has made. Now, I want you to be also aware, when you get your license, if the dealer fails to file the VIT declaration or sells fewer than 5 motor vehicles in a year, the chief appraiser will notify the Texas Department of Motor Vehicles, and the department will begin the process of terminating your dealer's license or actually prohibit the dealer from renewing his or her license. You know, dealers can receive substantial fines if you fail to file the required monthly report that I'll show you here in a minute, or the end-of-year declaration. The fines for failing to file the end-of-year declaration are $500 a day and or $1,000 per month. I want to repeat that. We've got to be aware of these fines, okay? The fine required if you fail to file the end-of-year declaration are $500 a day and or $1,000 per month. And for the monthly report are $100 a day and or $500 a month. So I want to repeat that. The fines for failing to file the end of year are $500 a day and $1,000 a month, or for that monthly report I'll show you here in a second, are $100 a day and or $500 a month. So remember, filing your motor vehicle inventory declaration, which you will be filing annually, and the motor vehicle inventory statement, which you'll do every single year, are part of the gig here. Okay, it can be very, very expensive. And I want to remind you, if you sell less than 5 vehicles a year, you will not be able to renew your license. You must sell at least 5 or more vehicles every year in order to renew your dealer's license. So, not filing your motor vehicle inventory declaration by February 1st every year will be very expensive for your dealership and can lead to the termination of your dealer's license. So now I want to show you a different form. The form we just discussed was Form 50-244. That's the motor vehicle inventory declaration. And remember, that's filed annually. The next form is Form 50-246. And this is what we call the motor vehicle inventory tax statement, or your VIT, okay? In addition to the motor vehicle inventory declaration that must be filed every year before February 1st, a dealer must also file a monthly VIT statement, which is Form 50-246, with the county chief appraiser listing all motor vehicles sold and prepay the property taxes for each vehicle, okay? So I want to repeat that, okay? Every single month, we are going to file a Form 50-246 with the county chief appraiser listing all vehicles sold, and we're going to have to prepay our property taxes for each vehicle that was sold. A copy must also be sent to the tax appraiser collector. No VIT payments are due on these reports during your first calendar year, but I want to remind you, your second calendar year in business, you will be submitting these property taxes to the county. Okay, so a dealer must meet the following monthly vehicle inventory tax statement requirements. We're going to file 12 VIT statements every year. Remember, one for every month. So the dealer must file 12 VIT statements every year. The dealers are going to file VITs by the 10th day of the month following the month this being reported. So for example, if you're filing VIT for the month of January, it must be filed by February 10th. If you're filing VIT for the month of July, it must be filed by August 10th. Dealers must file VIT with the county tax office along with the prepayment of the taxes. Dealers must send a copy of the form to the county appraiser's district, and a dealer must file a statement indicating no motor vehicles were sold during the month if applicable. So for example, if you had a slow month with no motor vehicle sales, you're still going to file the statement indicating no sales. We're doing this absolutely every single month. As I said, it's part of the gig. If a dealer is getting licensed for the first time and was not licensed on January 1st, the dealer does not assign property tax units or send prepayment of taxes. Excuse me, that's a unit property tax factor. The dealer must also retain documentation of every single vehicle sold. Here is the dealer monthly vehicle inventory tax, your VIT statement, Form 50-246. Once again, let's go ahead and magnify this to ensure it is being completed correctly. And during the completion of this form, we're going to learn how to compute the very important unit property tax. Now, starting off, this form is a little bit different than the vehicle declaration statement because this form is filed every month. So first, you will enter the month and the year and the page number. Then you will enter the address of your tax county office, which you will be sending the original to. Then enter your appraisal district contact information, which you will be sending a copy to. Next, you will enter the dealer name and the dealer contact information, the name of the person completing the form, and the title of the person completing the form. Then you will enter the name and address of your dealership along with your account number, and you'll get your account number from your county when you first get your dealer's license, and we'll discuss that in a little bit, but you have to have your account number before you can ever file this form. Enter the business start date if you were not in business on January 1st, and then you'll enter your general distinguishing number. Sometimes we call that your P number. That's your dealer license number that you'll have once you get your license back from the state. Then enter the date of the sale, the model, the make, the VIN, the purchaser's name, the type of sale, the sales price, and the unit property tax. And in just a few moments, I'm going to explain the unit property tax factor in depth. We will cover the unit property tax factor as soon as we complete Form 50-246. Next, enter the number of units sold during the month you are reporting. First, enter your motor vehicle sales. And a motor vehicle is known as a fully self-propelled vehicle with at least two wheels, which has the primary purpose of transporting people or property, whether or not intended for use on a public street, road, or a highway. And this would also include a towable recreational vehicle. A motor vehicle sale would not include vehicles with salvage certificates of title or equipment or machinery designed and intended for specific work-related purposes other than transporting people or property. Then enter any fleet transactions. A fleet transaction is when you sold 5 or more vehicles from your inventory to the same person in one calendar year. So, for example, you might have sold several trucks to a person that owns a landscaping company. Then you would enter the sale of vehicles to other dealers, such as any vehicles you sold directly to other dealers or vehicles that you sold through dealer auctions. Then you'll enter the subsequent sales. These are dealer finance sales of motor vehicles that at the time of the sale maybe have had dealer financing directly from your inventory. Then you'll simply enter the sales amounts for each of the categories as well. Be sure to have the person completing this form print their name if it's not you, their title, and have them sign and date it. As you will see at the bottom of the form 50-246, it states that if you make a false statement on this report, you could be found guilty of a Class A misdemeanor or even a felony. So be sure the information is true and correct. Now I want to talk about prepaying vehicle inventory taxes that are due. During your second calendar year in business, you're going to prepay vehicle inventory taxes that are due every single month. Now I want to repeat that again, okay? During your second calendar year in business, you will prepay vehicle inventory taxes that are due every single month. You're not going to prepay these taxes your first calendar year in business. You're going to pay these taxes your second calendar year in business. Every dealer is required to deposit the total unit property tax assigned to all motor vehicles sold in 1 month with the county assessor collector on or before the 10th day of the following month. Remember, you must deposit the total property tax due before the 10th day of the following month. So let's say you are depositing the total unit property tax for all vehicles you sold in January. The deposit must be made before February 10th. If you're depositing the total unit property tax due for all the vehicles you sold in February, you must make the deposit before March 10th. The deposit must be made before the 10th of the month following the month that you sold your vehicle. And this is going to be mandatory every single month, your second calendar year in business. You must deposit the money into an escrow account that is assigned to your dealership by the county in which your dealership is located. Your county assessor will help you set up your account right after you receive your dealer's license. And by the way, just to let you know, a dealer may never withdraw money from their escrow account. Let's talk about the unit property tax factor. You will need to contact the county assessor or appraisal district in the county that your dealership operates in to compute your unit property tax factor. The unit property tax factor is dependent upon the county that your dealership is located in. The unit property tax rate varies greatly upon, where your dealership is located. And, just as a quick reminder, all the information we're discussing is clearly explained in the dealer operating manual that you downloaded at the beginning of your dealer training course. And you can also view these training videos at texasdealers.com over and over again by just going to texasdealers.com and clicking on the dealer videos link on any page. Once you have determined your county's unit property tax factor, it is very, very easy to compute the unit property tax rate. You simply multiply the sales price of the motor vehicles that you sold by the unit property tax factor. You'll add all the local tax rates, and in the example we discussed just a moment ago, you would have your aggregate tax rate of $2.45 per $100 of the vehicle's value. So the aggregate rate for this example would be $2.45 per $100 of value. So you would divide the aggregate tax rate by 12 for a tax rate per month. For an example, $2.45 divided by 12 would equal 0.20417 cents per $100 of value. So you'll divide the aggregate tax rate per month by $100 for a tax rate per dollar of the vehicle sales tax price. So for example, 0.20417 divided by $100 equals 0.002017 rate per dollar. And that's the unit property tax factor. And you'll be able to easily get this number from your county. So what we'll do then, we're going to multiply the sales price of the vehicle by the unit property tax factor. So for example, $10,000 times 0.002017 equals $20.41 in tax prepayment. Once you have that unit property tax factor, you just take the sales price of the vehicle and multiply it by the unit property tax factor. And as we're learning about the unit property tax factor, I want to remind you that at any time you can contact your county assessor or appraisal district for any questions on your unit property tax factor. So we're going to apply the unit property tax factor to each vehicle sold in a month and report to the county tax office along with the tax prepayment. And you will send a copy of the monthly tax report to the county appraisal district. So remember, It's considered a sale even if the vehicle is taken out of Texas. Changes to the property tax factor will happen each January to use the preceding year's tax rate. So for example, for the 2019 adopted rates, we're going to determine the unit property tax factor for January through December of 2020. Okay, so let's talk about that again. For example, the 2019 adopted rate will determine the unit property tax factor for January through December of 2020. And let's just say we're using the 2020 adopted rates. That will determine the unit property tax factor for January through December of 2021. You got to contact your county's collector assessor to determine your county's unit tax factor. And they're going to be very, very helpful when computing your unit tax factor. Remember, your county tax factor is dependent upon the location of your dealership. So I want to show you this. The following example depicts where you would enter your unit property tax factor. And for this example, this assumes you, the dealer, has sold 4 motor vehicles to retail customers on the line and then 2 motor vehicles to other dealers. Those are wholesale sales. You do not compute the unit tax factor on vehicles sold to other dealers, but must include those sales on Form 50-246. This displays a unit tax property factor that I showed you just a moment ago as an example of 0.00020417, just as an example only. So you're going to add up the unit tax for each vehicle to determine the total unit property tax due. So according to this scenario, you're going to submit $55.12 to your county assessor collector for the VIT due. Very simple. Once you've got this established, you just total up your sales basically and multiply it by your unit property tax factor, and you will know exactly the payments that you'll be making each month. Unit property tax is never due when you sell a vehicle to another licensed dealer. Now remember, you're not going to assign a unit property tax on vehicles you sell if you were not in business on January 1st. You will begin assigning a unit property tax on vehicles you sell your second calendar year in business. So you're going to be able to learn the ropes for an entire year, and then your second year, you will start depositing that money into an escrow account every single month. You know, some of the state's larger counties have actually developed their own motor vehicle inventory declaration and motor vehicle inventory tax statements. If your dealership is located in a county that has their own VIT forms, you will need to use those forms instead of the state forms, which I just showed you, and they're very similar to Form 50-24 and Form 50-246, but they have county-specific information already entered, so they actually make it pretty easy for you if you are operating in one of the state's larger counties. As an example, if your dealership is located in Harris County, you'll be filing Harris County Form 23-121 for your annual inventory declaration, and Harris County Form 23-122 for your monthly VIT statement. Dallas County also has developed its own inventory declaration and VIT forms. Most counties in the state, however, allow you to use the state VIT forms that we just discussed. You know, I want to really recommend that, staying in contact with your county tax assessor collector will always be very beneficial to your dealership, and they will certainly help you with any questions you have, especially when you're figuring out your unit tax factor. There are several programs that will actually help you file your VIT statements in a timely manner, although there is a charge associated with any software program. But I want you to be aware the Texas Office of Consumer Credit Commissioner has a webpage listing approved software providers, and you can go to their website. That's www.occc.texas.gov. And you're going to see an extensive list of software designed specifically for Texas dealerships. Most dealer software companies will allow you a 30-day free trial, so you can probably try several different programs before you decide on which one is best for your dealerships. These software programs are all optional, and most of them do have a monthly or an annual charge to use. However, they can really help you maintain your compliance and help avoid any fines. Remember, your motor vehicle inventory declaration is filed annually with your county appraisal district, and your motor vehicle inventory statement is filed every month with your county tax office. For questions regarding your annual motor vehicle inventory declaration, you should contact your county appraisal district. For questions regarding your monthly motor vehicle inventory tax statements, you should contact your county tax office. For general questions, you can contact the Comptroller's Property Tax Assistance Division, and that phone number is 800-252-3121. Then you'll click 2 for the menu options, and then click 1 to contact the Information Services team. Vehicle appraisals by licensed motor vehicle dealers. Texas law allows a purchaser of a used motor vehicle in a private party sale to get an appraisal to establish the amount of the motor vehicle sales tax that is due. A private party sale is a sale that takes place between two individuals that do not hold dealer licenses. The transaction does not involve a motor vehicle dealer. However, that individual may request an appraisal from a licensed dealer. So, you, as a licensed Texas motor vehicle dealer, are allowed to appraise the value of a vehicle that you are licensed to sell. So, for example, if you hold a motor vehicle GDN, you may only appraise motor vehicles. If you hold only a motorcycle GDN, then you may only appraise motorcycles. A dealer that only holds a motor vehicle GDN may not appraise a motorcycle, and etc. To assist you in appraising the vehicle, you can use helpful services such as maybe Manheim Market Report or Black Book. These guides help you determine a vehicle's value, and they can be found on your favorite search engine, and they're normally going to be available only to licensed dealers. The state sets the fee that can be charged for an appraisal. The following shows a breakdown of fees that can be legally charged. Motor vehicles, at least $100, but not more than $300. Motorcycles, at least $40, but not more than $300. Travel trailer or motorhomes, at least $100, but not more than $500. When appraising a vehicle, you'll need to use Comptroller Form 14-128. You must view the vehicle in person. This is not something that you can do remotely. I want to repeat that. You must view the vehicle in person, and you'll need to complete Form 14-128 in its entirety. If any item does not apply, then you must state not applicable. So you never want to cross out mistakes, or this form will be void. If a mistake's made on the form, then you should complete a new form. You must identify mechanical, appearance, and any other issues that would affect the vehicle's retail value. So as you can see, this form is pretty straightforward. Be sure to enter all the purchaser's contact information, information about the vehicle being appraised, and the appraiser information, including your dealership name and your P number and the printed name of the appraiser. Then you'll need to enter the retail value and give an explanation of how you came up with an appraised price. So for example, you might state this is an accurate appraisal based on Black Book or maybe Blue Book value. You'll enter the appraisal fee, and then you're going to sign and date the form. And if you think about this, marketing appraisal services to private individuals can definitely add revenue to your dealership. Conducting several appraisals a month would certainly increase your bottom line. Just make sure you're following all the rules that we just discussed. If you have any questions about motor vehicle appraisals, you can contact the Comptroller's office at 800-252-1352, and their website is www.comptroller.texas.gov, and you'll find all that information in the manual that you downloaded at the beginning of your dealer training course. Let's go ahead and do our unit review. This was a pretty long one here. In this unit, we learned how to register a dealership with the Secretary of State. We learned how to obtain an employer identification number. We learned about licensing with the Texas Office of Consumer Credit Commissioner, motor vehicle sales tax, the annual motor vehicle inventory declaration, and the monthly vehicle inventory tax statement. We also learned how to prepay inventory taxes that are due and talked about the unit property tax factor and the rules and guidelines for vehicle appraisals by licensed Texas motor vehicle dealers. Remember, you can view this unit at any time by visiting the TexasDealers.com website and clicking on the Texas Dealer Videos link.